Welcome to Almost Here, Round the Corner Future Technology podcast with Richard Jacobs. Future technologies poised to transform our lives for better or worse are the focus of this podcast. Almost here means these technologies are now here and starting to be used, or just around the corner, from Bitcoin to artificial intelligence, 3D printing, blockchain, virtual reality, and more.
Hi, this is Richard Jacobs with Future Tech Podcast, and my guest today is Gavin Smith, the creator of a new coin that's coming out, A.I.Coin, artificial intelligence coin. So I'm excited to talk to him about it. Gavin, how you doing?
I'm good, thank you. Thanks for inviting me onto your podcast.
Yeah. So, can you give listeners just a little bit about your background and what A.I.Coin is about?
Sure. Well, I've been involved in finance for over 20 years now, and in the cryptocurrency space for the past. I've been interested in it for the past 4 years, although involved with the company for the last 2.5 years. And the company I work with is First Global Credit, and we set up really to offer a range of investment choices to holders of cryptocurrency. So allow people to trade stocks, trade futures, trade foreign exchange, using their cryptocurrency as collateral to make investments and trades.
Really? So I can use, for instance, if I have an account, I can take Bitcoin and fund my account with that, and then I could buy stocks?
Absolutely. So we cover all of the Nasdaq and S&P 500 stocks, plus some European markets and Hong Kong, the Hong Kong exchange, and we're expanding the range of exchanges over time. That's
really cool. That's interesting because it's always been, I call it a moat or a chasm to go from fiat to crypto. But for instance, here in the United States, crypto is considered property. So I wonder what's the legality of going from crypto to an equity and back and forth? Is it like going into fiat, or is it different?
It's the way we have to operate for exactly the reason that you mentioned. There are a few rules that we have to follow. Firstly, customers can deposit cryptocurrency and withdraw cryptocurrency, but they can't transact. They can't take money out in fiat currency, and that's to fit within the cryptocurrency regulations. The second key point about the way we work is the money for the stock trades and the futures trades are our company money, and their asset, exactly as you say, their asset is used as collateral. So it's much like people who use gold as security to trade stocks. It's a very similar compliance and business model to that. It's essentially a commodity, an asset that's held and can be liquidated to meet any losses in the cryptocurrency, but similarly, any gains on the stock get converted into cryptocurrency and credited to the customer's account.
Very interesting. Just one more question on it. What about if you have a stock that pays dividends, or if you have a cryptocurrency that you can stake or mine or have it run a node on, because both produce quote unquote dividends? How is that treated?
So let's say you were holding Google and they paid out a dividend, then that would be credited into your contract that you're holding, and then when you liquidated the contract, it would be converted into cryptocurrency. So you would receive the dividend. The only caveat is there's a 30% withholding tax which we have to hold on US stock dividends, because we're not a US based company, so that's the only slight difference that you would see. But yeah, you receive dividends, and again, they're converted into cryptocurrency at point of closing of the trade.
Very interesting. Okay. Well,
so that's
sorry, we got sidetracked by that.
Yeah, absolutely. Yeah. That was our starting point. Now, a lot of our customers, they've been speaking to us for a while now, saying, okay, well, what I'd really like, I like trading, but I also would like to put my money with a trader or someone who can manage those funds and trade the market for me to generate a return. Now, we've looked at whether we should do social trading or things like that. And what we actually looked at in some detail, because of my background in the past, was I've worked with some guys that use AI models for trading with banks. And we looked at the idea about a year ago. We started looking at it of whether those models could be used and trained to trade cryptocurrencies. So rather than trading conventional markets, actually trade the primarily Bitcoin to start with, but also we've extended it to some of the major other cryptocurrencies out there, and see if there was mileage in training up models and allowing people to follow the models in effect. And we looked at it, and I think because cryptocurrency is still quite a new industry, certainly from a trading perspective, there's a lot of inefficiencies in there. So it's a perfect marketplace to use an AI model to train on that data and to really look for anomalies and opportunities to take profit out of that market. So something we've been looking at for about a year, and that's now coming to fruition and ready to be rolled out. So that's kind of how we started to come to this new product that we're working on.
Yeah, now I've got questions about that. And I promised everyone we will get to A.I.Coin, but yeah, it's rare to find someone that's even willing to talk about algorithmic trading. And I know it comes from the the stock market equity space where they have quants and spend millions on these high frequency trading platforms. How much do you want to recreate from what's going on in the equities markets? Do you want to do high frequency trading? Do you want to have completely automated training that uses AI to learn and improve? Maybe a few details about what you've accomplished
Absolutely.
so far.
So the first thing to probably highlight is the models themselves wouldn't follow typical high frequency trading approaches, and the reason is cryptocurrencies are quite different from regular markets in the sense that spreads are wider, commissions are a lot higher. So to execute rapidly and take advantage of small anomalies in the market, you can do, but the liquidity is not really there. And what you would find is very quickly the model would end up pushing the market around. And there's a perception that the models make money because they push the market around. It's actually the opposite. In a perfect world, you want a model that doesn't influence the market at all, but just takes advantage of anomalies. So the way we've actually been training the models is to take a longer term perspective, and the way we do that is you don't put a straitjacket on the model and say, okay, you can only trade once a day or once a week or once every 5 hours. What you do instead is you alter the slippage on a trade. So how much you expect to lose on what we call slippage, so that's brokerage plus market moving against you on every transaction you do. By making that larger, you essentially force the model into taking a slightly longer term perspective and a longer term view of the market. So that's what we've tried to work on, to really provide a sustainable model, something that's not going to wreck the market it's trading in, and also something that over time can move a reasonable amount of money into and out of the various cryptocurrency markets. Because what does us no good is to have something that can do a few coins and then the market moves away from it. So we've had to be quite careful how we train the models to take advantage of the anomalies.
I guess two things that come to mind is where are you going to have these AIs run? In your own exchange, or it sounds like it's still possible to arbitrage across exchanges right now, getting price differences.
Absolutely. And the way we operate, we actually will run through, for the primary company, the First Global Credit Company, we have a hedging algorithm. What that's doing is, let's say it needs to buy Bitcoin. We've got APIs into the major exchanges, and what it will do is it doesn't arbitrage per se, but what it does is when it needs to buy, it will select the lowest price, and when it needs to sell, the highest price. So it's as a matter of course taking advantage of the anomalies and the differences in price level. That same set of algorithms will make available to the A.I.Coin. So essentially the trading process will be two-stage. First, the decision's made. That then gets fed through to the hedging algorithm, and the hedging algorithm then decides where to trade, how much to trade, and also to feed those trades in over time. So, as we said before, so it doesn't impact the market too quickly.
Okay. Any problems? For instance, Bitcoin, the network and the mempool is like bursting at the seams. Coinbase just said they're having delays on incoming Bitcoin deposits. It seems like a nightmare. So is that going to hurt your algorithms? Any of the particular coins having
Sure.
their own internal scaling issues?
The transaction speed, less so. I mean, it can at the edges, in an edge case, if we needed to move money from one exchange to another exchange relatively quickly, then that's an edge case where it could impact. But what's more of an issue for the model trading is sometimes under busy markets, some of the exchanges fall behind, and their price information that's published is out of date. So part of the algorithm is to make sure that it is able to trade at the price that it thinks it's able to trade at. And the way it does that, it uses small testing trades ahead of time just to make sure the market is where it believes it is before it moves a full trade onto the exchange. So you're absolutely right. There's real world issues with cryptocurrency trading that perhaps aren't there with more regular markets, which are more established. So, and you need technology to overcome that and make sure that you're executing at the price you believe you're going to execute at.
Yeah, another thing I've traded, a tiny bit, but I've seen that even 1,000 of, some of the less liquid coins, you can't get the order filled, so especially at the low price, like a 5-cent coin, you can't even buy or sell lots of 1,000 cleanly, and orders
Sure.
tend to get filled at, 37.94 of your coin sell order was filled,
and then the markets move.
And markets move. I mean, actually, now that I think about it, it seems incredibly difficult.
Yeah.
And probably necessary for an AI system to do this trading, because otherwise it'd be a mess,
Yeah, no, it's exactly that, because it doesn't sit there getting frustrated the way I probably would if I was looking at the market move away from me. And what the model does, it will switch between different markets, putting small amounts in and slowly building up the position. And again, this feeds into the one of the reasons why, as we mentioned at the start, that the model is designed to assume longer timescales and larger slippage, so that exactly for that reason, it can take a bit of time to feed into the market and build a position up. The other thing we do to overcome that problem is the starting point for the models is to weight the capital across the various coins based on their market capitalization. So it means that the majority of the trading will absolutely be in Bitcoin, followed by Ether, and then the other coins significantly lower amounts. So that way, the majority of the capital is being deployed in a market that's more able to absorb that amount of trading volume.
Yeah, you might have to split up your trades amongst several exchanges at once. I mean, not to hide, but just not to move the market. I mean, yeah. I know my brain's going, so it sounds like
it's absolutely. Once we started looking at it and looking at the issues and how we were going to run it and trading a sample portfolio, it's exactly these things started to become obvious. Things that wouldn't necessarily be obvious just from regular markets that are unique to the cryptocurrency space. So it's challenging, but exciting. That's why there are opportunities there, because if it were easy, everyone would be doing it.
Yeah, and the last issue I'll bring up is settlement. It's not so simple and so fast necessarily to get your money onto a given exchange or multiple ones and get it off of them into wallets.
Absolutely.
I think every night at the end of the quote unquote trading day, or watch out your balances, or if you're up, pull a certain amount back into wallets and get them off the exchanges. And so there's those factors too, I guess.
Yeah, we again the training assumes no leverage. So what the models are doing is switching between the various cryptocurrencies. So what that allows us to do is move the funds back off the exchanges when there's no trade to be executed. So it has access to multiple wallets for the various coins which are off exchange, and the principle which we follow with our company and also will follow with the coin is that no more than 15% would be with any single exchange at any moment in time, and we keep the cryptocurrency with various exchanges for the minimum time necessary. And because, as I said, we're not using leverage, it's simply moving in and out of the various coins, it means we don't have to leave it on the exchange. We can simply go in, switch to the other coin, pull the funds out. And you're absolutely right, it's not instantaneous, but it at least means the counterparty risk is limited to an hour or two while the trade's being executed, rather than leaving our funds with the various exchanges.
Yeah, it's interesting. Now I know why the equities markets, with and without leverage, people can trade so much faster, but it creates a completely different environment, like you said. So
very different.
All right.
Yeah.
All right. Well, you're a wealth of information, but let's talk about A.I.Coin. What is it, and how is it conceived?
So as I said, we started talking about using the models to provide a service to our customers. And then it was suggested that maybe we package it as a coin, because it fitted the criteria really well for a digital asset. It was self-contained. It was cryptocurrency. It was something that could be managed and made public on the blockchain, so people could see the performance. People could actually get the transparency of a blockchain, but with the AIs making the decision. So that's why we actually started looking at an ICO for initially just the AI trading, and then it was like opening a Pandora's box because one of the things that we then started talking about is, again, it comes back to what we were saying earlier. If the coin's successful, it builds up funds. Do you distribute them, or do you reinvest them? If you reinvest them, is the funds going to become too big so that it's going to not be able to trade the coins without moving the market? So what do we do with those funds? And from my perspective, one of the things that I've always been interested in is really trying to help seed companies in the space, both in AI but also public blockchain. And this gave us actually the opportunity to look at a way to implement that, which is really how we came up with the second stream of what's within the A.I.Coin ICO. When the models make a profit, a large percentage of that profit actually moves out of the coin, what we call the coin pool, which is a pool of cryptocurrencies that the models are trading, into an investment pool. That investment pool is there really to invest in seed companies in the AI space and in the public blockchain space. And if anyone, as I have, looked at angel investing, there are two problems that you've got to overcome. First one is expertise. I've got stuff I know, and there's a huge amount of stuff I don't know. When you're investing in companies, if you rely on just your expertise, it's quite a narrow field of companies that are appropriate and possible. The other problem you have is, let's say you allocate the funds that you're going to use for this. You might pick 10 companies. You find those 10 companies. Seed investment tends to be quite long term. It's quite a long time before those companies gather momentum and you get an exit strategy. So you tend to be sitting there waiting for one of these companies to hit a point where you can exit, get some money back to reinvest in new companies. If something great comes along after you've made your investments, you're sitting there thinking, well, what do I do? I can't invest in it. What we've structured is something with the A.I.Coin that overcomes both of these limitations for seed investing. The expertise I'll come to in a second. The first is when you can invest in companies. By every month taking a portion of the profit that the AI model generates into the investment pool, it's like a faucet, it's like a tap topping up the pool. So every quarter, you've got new funds that you can invest in new exciting opportunities. So you're not just limited to the first 10 companies you find. When a new company comes along that's promising, you've got funds to invest in it. The first problem, which is more of an issue, is the expertise problem. And this is where the ICO really comes into its own, because with a smart contract, what you can do is use the expertise of all your coin holders. You can present the prospects, present the information, present the investment opportunities, and you've got thousands of people looking at that who are interested in trying to decide which are the best companies to invest in, and collectively come up with the best choices. So it's like having an army of 1,000 people doing due diligence alongside you, and you get the expertise of all of those people. And by using the blockchain to make the voting completely transparent and open, everyone can see these are the companies presented, this is what the coin holders collectively have selected, and that's the company that will get the investment. So it allows you to construct, I mean, the way I look at it is it's almost like an investment cooperative. The investment pool is owned by the coin holders. So they're the ones that own it, they're the ones making the decision. And there's a lot of evidence that for selection of companies and prediction, crowd decision making surpasses a panel of experts, because you've got that range of expertise to draw on.
Right, so the AI is going to be more handling the mechanics of getting the collective decision of people into and out of trades, or is it going to be actually making recommendations on what to trade?
Well, the first stream where it's trading the cryptocurrency, that will be the A.I.Coin. So the A.I.Coin's job, for want of a better word, is to generate new profit to go into the investment pool. The crowd's job, in quotes, is to then take that investment pool and choose which seed companies to invest in. So it's very much two streams to the operation, which use the power of the AI to generate short-term trading profits and the power of the crowd to select longer-term investment opportunities for the coin pool to invest in. So it's very much a split strategy, using the power of each to its best advantage.
That's wow. That's fascinating. Huh.
Yeah, it's
pretty sophisticated system. Huh.
It's really exciting. I mean, when we looked at how we could do it, it's a great opportunity for us to put something out there that at the moment is completely unique. There's nothing out there that combines the two aspects in the way we're looking at doing it, but it's really turning the the venture capital paradigm on its head. Rather than giving your money to a few experts that then make those decisions, what you're actually doing is allowing people as a group to combine their expertise and make those selections. And I think more and more that's what the ICO allows people to do. ICOs in general, not just ours. It allows people to collectively come together and provide the mechanism to make superior choices and superior decisions, which I think is.
So is it kind of a proof of stake thing? Like this is what I want. I'm sure we'll get into. So,
absolutely,
how much does my vote count for, and will I be given quote unquote like expert choice status? Do I, as a member of this group that's choosing, can my opinion get elevated to be considered more authoritative than other people's through some mechanism?
It's proof of stake on the basis of how many coins that the person holds. But we do have what we are having is an investment board which will give recommendations, and that board will be made up of people selected by the coin holders. So exactly as you say, people can present their expertise, and the coin holders can say, yes, that person should be reviewing this investment opportunity because they've got the expertise to do it. So there will be a short-term investment board that will be able to carry more weight in effect.
Well, okay, so that points out a couple things to me. One is that whales would have more of a voice by virtue of them having more coins. So you'd have to be very careful on the ICO, because certain people are just going to want to buy in huge, even if the starting gate is lifted at the same time for everybody and it's equitable and all that. Why not have a system whereby it's partially proof of stake, but as for each decision, people vote, obviously with their tokens, but if you see that someone has more right predictions than others, why not weight their vote more heavily over time, or have even like this feedback system, so that you're not just relying on stake amount and a board.
I think that's a neat addition, actually. I wish I'd spoken to you more than a few weeks before we produced the white paper, but I think that's a really neat innovation, because exactly as you say, some people have, because of their unique expertise, a better outlook on what's going to be successful and what isn't. That's certainly something which I think we should look into. I'm not sure how that would be implemented in the short term, but it's definitely a good innovation.
Yeah. Well, you could always change things. Things aren't.
Yeah, no, absolutely. And that's the other beauty of it operating as a co-op. The rules can be chosen by the owners, by the collective owners, who are the coin holders. So it's genuinely a democratic approach to running an organization.
And it's funny, speculation in the token will increase once the system is running and you see that it's profitable. The more profitable it gets, it would be, I would guess, a virtuous cycle, and more speculators would come into the coin, and the coin value would increase a lot over time. But it's actually, the cool thing is it's based on actual performance of the system,
Absolutely. That's exactly what we believe as well, that once the system starts proving itself and generating returns, then you'll get a PE effect coming into play, where the coin is actually worth a multiple of its earnings rather than just what the assets that it holds are worth. And the model we're using it's a one-off issuance. So once the coins are issued, they're fixed. There'll be no mining, no second distribution. So the only way for new participants to get involved would be to buy coins on the open market, which there'll be a number of exchanges that we're talking to that we're hoping will list the coin, so people will be able to buy in the, if you like, the aftermarket.
Do you think there'll be any conflict of interest that the exchanges will feel if you're going to use algorithmic trading on their exchange, and yet you want them to carry your coin? Because from what I understand, exchanges will say, all right, we'll carry your coin, but we want X numbers of the coin for free or discounted rates, and they hold them.
I think the one thing which, in many ways, that actually gives us an advantage, because if anything, they would want the business that we'll be bringing to their exchange. So it makes us quite an attractive coin for them to list as well. The only thing we wouldn't do is have the AI model trading our own coin, because that I think would be quite a difficult situation. So
yeah, you're right,
the AI model won't be trading our coin, but it will trade obviously other coins on those exchanges. So.
But by proxy, again, the coin value will increase if the AI and the decisions from the crowd are successful. So even though it won't trade your own coin, in effect, your coin is the summation of all the trades you're making of other coins and your holdings. So
exactly.
Yeah, it's a nice way around it. Interesting.
And sorry, go on.
Go ahead. Oh, go ahead.
I was saying the way we're actually structuring the whole coin entity, there'll be a Singapore company underlying it, which will be run for the benefit of the coin holders. And there'll be essentially an investment note that gives all assets and assigns all assets and profits to the coin holders. And that allows us to straddle both the cryptocurrency space, but also if they voted to invest in a company which wasn't doing an ICO but was doing a regular share issuance, then the company could invest in those shares. So it does give a little bit of, for want of a better word, real world exposure as well as the cryptocurrency side of things.
Are you going to have a reward system for this, stakeholders in the coin that make a lot of good decisions that brings the fund more prosperity?
Absolutely.
As a reward.
Yep. So when an investment is realized, and let's say there's an exit down the road, then the coin holders who selected that coin get a percentage of the profit from that distribution, from that sale, as a distribution to those coin holders. And again, because we have the record on the blockchain, we can see who those voters were. So it's completely transparent that yes, these people selected it, and they're the ones that get the reward from that investment. But the caveat is they would still have to hold coins in the ICO to do that, because otherwise there's no mechanism to distribute out to those coin holders.
Interesting. I think this is absolutely fascinating. Tell me some details of the ICO that you can tell me. When's it coming? Where is it going to happen? How can people that are interested, start watching it and get involved and read the white paper?
So the white paper and the profile will be released at the end of this month, end of May, and we'll be starting to do some presentations and live Q&A sessions where people can raise questions, ask details on it. We're setting up a website which is A.I.Coin.io, which will give details exactly as you say, what details of the white paper, some videos, the pack, full details of how it's going to be structured, full detail on how the coins will be managed and the escrow arrangements that we'll have in place. So that's that website is there now. And people can also register to receive updates. And also, the way we're operating the issue of the coin is stage one. Before the official start of the subscription, people can pledge. That's the word. I always use the wrong word. And Marcy, our communications director, corrects me. People can pledge to how many coins they want to purchase, providing they purchase within a reasonable amount close to that pledged amount. They also will receive a 5% bonus on the number of coins that they purchase. So there'll be a 6-week pre-subscription period where people can see details, see if they like it, pledge to purchase coins. There's no obligation at that stage. It's all they're saying is, when it's launched, I am going to buy X coins. Providing when it's launched, they buy those X coins, then they'll get 5% bonus on top of that number of coins when the subscription starts. We expect the subscription to be starting in July. So.
Okay, very good. I think that's all my questions for now, but I love the interview. I had a great time talking to you, and I really appreciate you coming on the podcast.
It was great to be here, and thanks for inviting me. It was a real pleasure.
You have been listening to Almost Here, Around the Corner Future Technology podcast with Richard Jacobs. Subscribe to this podcast, post a review to discover more future technologies that are poised to transform our lives for better or worse, such as Bitcoin, artificial intelligence, 3D printing, blockchain, virtual reality, and more.